What's up everyone, it's Kadi with Money Investing. So in this video, we are going to be talking about Upstart, ticker symbol UPST, which absolutely collapsed after it reported earnings. So I'm going to break that down. In this video, we're going to break down exactly what you need to know about this company, why the sell-off, what really happened, and of course, what's the future for Upstart moving forward. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you want to join. Of course, be a part of our money investing community, get access to all the trade ideas, buy and sell alerts, options alerts, and of course, all the members only private videos, intrinsic value spreadsheets. Everything is going to be included with the link down below, and we'd love to have you on board. So first things first, Upstart definitely dropping pretty heavily, right? 34% on the day, after hours down another 1.35%, coming down to $33.57. It was trading at just over $51. That was the previous close for Upstart, and of course selling off pretty aggressively. And the 52-week range obviously is between 11.93 and 72.58. So we've definitely seen Upstart swing wildly in the last 1 year, and of course it's one of the most volatile stocks in the market out there, with the highest beta relative to the S&P 500. We've talked about this company before plenty of times. I've traded this stock plenty of times, and it has really just been a wild ride for Upstart, going from, just a $20, $25 stock all the way to over $400, 1,600% rally, then a 90% drop, and then another 560% rally, and then of course a sell-off of 55% in just a matter of very short period. So this week it is down over 44%, and we're going to break down exactly why that is. And we've talked about Upstart's business model also having this roller coaster because of interest rates, because it's an AI lending marketplace, and it basically connects banks and lenders and credit unions and dealers to consumers and borrowers. The transaction volume and a lot of the business depends very much on where interest rates are. If interest rates are higher, obviously the loan volume is going to be significantly lower than compared to when interest rates are lower, because there's a lot of encouraged borrowers in a low interest rate environment. So on the former, so Upstart basically reported decline of revenues of a whopping 40% year over year. That's not a surprise. We talked about this, right? We went over the earnings expectations and revenue expectations. And of course, on a net basis, they're generating losses of $28.2 million. And if you come over here, digging further, Upstart's lending partners originated about 109,000 loans during the quarter, totaling $1.2 billion, down 64%. On a year-over-year basis, conversion rate was also 9% down from 13%. I'll go over those numbers here in just a minute. I'll point those out. And in the meantime, for the third quarter, Upstart issued a guidance of revenue of $140 million, net loss of $2 million, and most analysts were modeling in net income for 2 cents per share and a significantly higher revenue of $155 million. So what we have here is revenue declining over 40% year over year, right? So $135 million. Net losses coming in at $28.2 million. And of course, contribution profit margin, 67%. And then we also did have, a little bit of a decline, significant decline actually, when it comes to this number right here, which is conversion rate, right? So down from 13% down to 9% in the second quarter 2023. And cash equivalents also coming down substantially, right? From almost $1 billion same time last year to $509 million, versus total liabilities that are pretty stagnant. If not, they've increased a little bit, from 1.1 billion to almost 1.2 billion dollars. And then if you take a look at transaction volume, number of loans, again, it's a very significant correlation between interest rates and the number of loans that they're doing. It's gone from 321,000 down to 109,000. That's like over a 60-70% drop in the transaction loan volume, and that just again is a very good correlator with respect to interest rates, right? If interest rates go higher, loan volume decreases. But I also want to pay attention to the quarter over quarter number, right? So first quarter 23 versus second quarter 23, we did see an uptick, right? That's gone from 84 million to 109 million. I think that's where the market is ignoring the fact that Upstart's business has pretty much troughed, meaning that it has already sold off to a point where the business itself has gone to its worst, like we've already seen the worst. And now when interest rates start to get cut, maybe starting next year, in the middle of next year, whatever the market's pricing and whatever the Federal Reserve ends up doing, if interest rates start coming down, you will start to see this uptick sequentially, right? That's what we're seeing right now. 84,000 to 109,000, and conversion rate also going from 8% to 9%. I think the focus very much was on year-over-year numbers, and year-over-year obviously do look pretty terrible. If you take a look again, year-over-year, 40% decline, 21% decline in contribution profit margin. Operating expenses were also lower, but we have seen a significant decline in those metrics. But if you take a look at quarter over quarter, 32% increase, right? 32% increase in revenue. We did see revenue from fees up 23%, contribution profit margins up 42%, and then net income obviously not available because they're still generating net losses. But if you take a look, $129 million in net losses down to $28 million. So what we have here is, if I can show you guys in a very simple graph, and there's some things that I also want to go over, which I will, but if I could just pretty much draw very quickly what I believe is happening with Upstart is that they basically saw very, very strong revenue, earnings, and profitability, and then rates started going higher. So what we experienced was that business basically started collapsing, right? So we started to see the revenue, earnings, everything come down. So what we're really doing is right now we're comparing these numbers with over here, right? Because year over year, we're seeing significant declines. But what's also happening is that the business quarter over quarter is now starting to increase. So this is being compared to this on a year over year basis, right? That's going to be year over year. But if you look at quarter over quarter, this right here is the quarter over quarter, right? So this might be Q over Q, right? That's quarter over quarter. So now quarter over quarter sequentially, we're seeing some improvement. Year over year, not so much, because again, last year rates were lower. There was a lot of transaction volume. So moving forward, I think, as I was saying, I think Upstart's business has already troughed. We're already kind of baselined a little bit. And I think moving forward, if, of course, the macroeconomics are favorable for Upstart, we could start to see some potential upside here with revenues, profitability, margins, contribution mix, all those different metrics that we look for could start to increase once again for Upstart. That's really what we need to focus on. This right here is a very interesting slide that goes over the UMI, that's your Upstart macro index, and pretty much shows you the macro effect on the default rate for the loans that Upstart has lent out, right? So 1.68 is a high number. That means 68% of the, basically what it says is, so 1.25 for a given month suggests that the macro caused default rates to be 25% higher than the long run average. So macroeconomics right now is causing 68% default rate to be 68% higher than the long-term average because of the macro factors. And that's all because of higher interest rates. And of course, the economy still strong, labor market still strong. But of course, it's causing 68% default rates to be higher, 68% by its long-term average. So 100 lending partners now, up from 71 same time last year, and 10 at IPO, and 61 dealers, and that's up from 39 in the first quarter. So they are still adding more lenders, more credit unions, more banks, more dealers, and HELOC also is something that they started. This right here is the guidance, 140 million revenue from fees, 150 million, and then of course net interest loss of $10 million, and contribution margin 65 million, net loss of $38 million, and of course diluted shares outstanding at $84.5 million as well. So with Upstart, I think the bottom line is, the question is, can they once again turn the corner towards profitability? Can they really achieve revenues, strong revenue growth and earnings growth once again? Because if you come over here, again, this is a very good representation of how earnings were growing, then they started declining, then they went negative, and now the expectation are once again to go positive. Same thing with revenue. Again, you can see growing, declining, and now once again, it's expected to increase revenue once again. So you can see the expectations are to go from 540 million to over 1 billion. That's over 100% increase. And of course, EPS to also go from like being negative this year to positive starting next year. So that's really where the expectation is going to be. I have no interest in owning Upstart at this moment from a long-term investment standpoint or even a trading standpoint because of the volatile nature. But of course, if it does end up trading at $12, once again, it will suggest for a very nice swing trading opportunity only, investment only if they can turn the corner once again and the macros are a little bit more favorable for Upstart. But nonetheless, pretty substantial drop. That's exactly why we are cautious, we are careful, because anything can happen during earnings. But that being said, support level next is going to be $26. That's going to be in line with those moving averages, all the way down to $12 per share for Upstart as well. So hope you guys enjoyed this video and a complete update on this company. Let me know your thoughts down in the comment section below. What do you think about Upstart? Are you buying, selling, holding? Are you trading this stock? What do you make of the earnings that they're reported? As always, links down below for our Discord, Patreon. We'd love to have you on board. You get access to all the benefits, all the binds alerts, everything's included. So check that out. As always, happy investing. I'll see you all in the next video.